In 2018, natural gas exploded in a few months. In 2021, it shot up another 180%. Now I'm seeing something even bigger forming, an exact replica of the pattern that preceded both of those massive moves. But this time, there's an unusual volume spike that makes this setup even more explosive. I've spent several hours analyzing this pattern, comparing it to every major natural gas rally since 2018. What I discovered left me shocked. This setup is showing the same technical signals that led to these huge moves, but with one critical difference that could make this rally even bigger. Before I reveal the pattern, make sure to grab my free newsletter where I share setups like SMCI's 240% move and NVDA's 200% rally. Just click the link in the description to get my most profitable investment strategy that is beginner friendly as well. Let's get into it. To understand the future, we first have to look at the past, and I'm going to show you several situations where we had opportunities to make profits from natural gas. The first one was back in 2018. So we see a major breakout. This is a weekly chart. We always want to have a weekly chart to see the longer time frame. And then we also want to be having the daily chart to see exactly where we should be getting into our trades. To understand the future, we must first look at the past and see several situations where we could have profited from this. So we see here a trend line break. Trend lines are only valid if they touch 3 points, as we all know that. There is a virtual contraction pattern here. We can see that natural gas, when it shot up, after it broke out, it did about 70% move. But from the absolute bottom, there was a 100% move. In 2020, we see it breaks out of a trend line on huge volume. I color code my bars whenever you see a green bar like this. That is huge volume. You could have actually bought here. This could have been a buy at first for an investor. Of course, you have to understand what you are. Are you a trader or you're an investor? These long-term charts are mostly for investors looking to do long-term trades, long-term investments. So you could have bought here. That could have been an initial buy. And then the maximum move was 400%. Of course, you're not going to be getting the full move, but I'm showing you the extent of what you could have gotten. It breaks out, corrects. I do have on my weekly chart, I do have the 10-week simple moving average and then the 30-week simple moving average. Those are the two lines that you see. So it breaks out. I didn't like this first breakout because the correction was very heavy. You can see it closes below the 10-week. You could have sold here, but then here was a very nice trend that could have been profitable for investors. So it breaks out of this trend line. We see a contraction here, jumps out of that. Unfortunately, we don't see volume, but then we can still get in with very low risk if we don't see volume. It breaks out. Then you can add here, and then you could have sold there, and this was a very good profit. I'm going to show you later in the video how you can actually buy natural gas, because a lot of people don't have access to the commodity itself. So we are going to be using special instruments that you can find on the stock market. So stay to the end of the video and I'm going to show you that. This was a 100% move. And in those instruments, a 100% move in natural gas, you could actually have gotten about a 200% move in those instruments, as I will show you. Closes below the 50 on heavy volume. We shouldn't be here as long-term traders or investors. So you sell there, you wait for another opportunity. We see that looks like a cup and handle or another contraction pattern, breaks the trend lines. You buy again here. And this one, of course, was a smaller profit. So you could have bought here. Maximum move was about 100%, but most likely you're going to get about 60% of that. And then there was another opportunity to go short on this asset. So we see a head and shoulders pattern. As we all know, this is a very huge reversal pattern. So as soon as it triggers here, you could have gone short and the maximum move was about 70%. So that was a very huge profit for investors. And then now we see something interesting happening again. So you see here, huge trend line break. We see that right now. We see contractions here. We see contractions here. And then it breaks out on huge volume. So you see this green candle. That's a very good sign. So if we now go onto our daily chart, then we can see exactly what is happening. We can see that it first looked like it was going to break out here before, and then it failed. Now, of course, failing is not necessarily a bad thing because it has broken out for a while. You could have already raised your stop, so you probably could have gotten out of this move unscathed and injured. So we wait for another opportunity as investors. Traders, of course, you can get these smaller moves, but investors, you really want to catch the big meat of the move. Your goal as an investor is to get it when it is breaking out, look for a position to add to the stock, like I showed you here, an opportunity to add where you can double your investment. So let's say you put in $10,000 here, Here you can double it to $20,000, and then your average price is going to be around $3. And then from here, you could have made a 70% return on $20,000. That is $14,000 compared to someone who just put in $10,000 here, and they could have gotten 88%, which is $8,800. So you see, you're almost doubling your profit by just finding a very good place to add to your stock. So someone here who managed to add and double their position, the average price could have reached about $3. And once they see 100% move, they could even have gotten out $20,000 instead of a person who had 10,000 and the maximum profit they were going to get is 10,000. So what you're trying to do is get a very good entry, wait for a location to add to your stock or double your investment, and then make sure to hit the sell button once you get a substantial profit. All of these things I discuss them in my newsletter, so you should make sure you subscribe to get these alerts. So here we see a huge resistance here. We see it failing several times, and then it breaks out, which is a very good sign. Pulls back on lower volume, which is something we like to see. And then today it gapped up in the morning. Those who are subscribed to my newsletter, long-term investors, will be getting an exact trading plan for this. Now that we are seeing that it is showing a very good breakout on volume, this is something we like to see. And let's see how much volume. A 131% increase in volume. This is a very good sign, and that shows that a big move, it might be very likely to start. We don't know if we shall get an opportunity to add, of course. If we get that, that will be beautiful. If we do not get it, that's not going to be so bad. So here we can invest. And how do we invest? Since we cannot buy natural gas on its own, you're going to have to buy natural gas futures, but I know a lot of people are not futures traders. So what you can do as a normal investor or as a normal person, you can go into your brokerage and look for ETFs. So the 3 ETFs which I recommend, the first one is UNL. So UNL is just a ×1 ETF of natural gas. So you can see it just mirrors the natural gas moves. We see these very big moves that happened in the past. It did about 250%. Let me use the weekly chart so that you can easily see the moves very well. You see this big move here, went up 260%. This is 3.5 times your money. So if you put in $10,000, you're likely getting out $35,000. These are the big moves that we want to be catching as investors. So the first move was here, 90%. The second move is here, 144%. And that is what I'm hoping happens here. You see a breakout in very huge volume. The second ETF that you can use is UNG. So this is the United States Gas Fund. So it tracks natural gas as well. So it replicates the move in natural gas. So what you can do for this one is, as soon as natural gas moves, I think this is also ×1 ETF. You can see it just replicates the moves 100% like natural gas did. Then here it also did about 175%, very close to what natural gas did. And now the third ETF, which is really volatile, and I recommend this for mostly traders, investors. You can try to avoid this because if you do not handle your position very well, you're likely to be burnt. It is called BOIL, which tries to replicate 2 times the move of natural gas. Now here's the interesting thing. Natural gas, remember, for this first move that I showed you, did 100%. Now let's see what BOIL did. When BOIL broke out for it, it moved up 274%. If you invested $10,000 in natural gas, you had the potential of making $10,000 profit. But for this one, you had a potential of making $30,000 profit. Isn't that very interesting? Then the next one, we saw natural gas moved up about 100% for this second move. BOIL did about 300%, which is ×4. So instead of making $10,000 on your money, here you could have made about $40,000 of profit. But of course, for these ones, you need to be knowing exactly when to get in and out, because for these leveraged ETFs, if it goes down, you're going to get burnt. To stay safe, just use UNG, which is a good natural gas ETF, which is ×1 of the natural gas. You're not going to be whipsawed around a lot. And for those who really want to see a big ride, which I do not recommend for beginners, you can use BOIL. I hope you found value in this video. If you liked it, please subscribe to the channel and share this video to others. Thank you.